couple months ago, we adjusted I knew we'd get the 60, I thought we'd get the 60, 70 by the end of the year, but ultimately it is not a target. Silver to what we call a new reality, meaning not just doubling the price, but, more likely quadrupling or more the price very quickly, meaning within 2 quarters. Thereabouts. The signal that generated that was not the fact that the net trend of silver and gold is positive. They've been positive for a couple of years. We think silver is highly likely to go, I think personally, my own positions, which I expose in the report at the end in a disclaimer, is likely to see, $200. And you might even see it within the next handful of months. In other words, within a couple quarters of that breakout.
Veteran market analyst Michael Oliver, founder of Momentum Structural Analysis, MSA, is issuing one of his strongest silver outlooks to date. According to Oliver, the recent breakout in silver is not a typical bull market move, but the beginning of a rapid shift into what he calls a new price reality. Oliver explains that while silver and gold have been in positive trends for several years, the current signal is different. It is not about a gradual rise or a simple doubling in price. Instead, the momentum structure suggests silver could quadruple or more, potentially within just 2 quarters. Previous expectations of silver reaching the $60, $70 range have been overtaken by much larger possibilities. Based on his proprietary momentum signals and disclosed personal positioning, Oliver believes silver could reach $200 per ounce, possibly within a handful of months following the breakout. He emphasizes that this projection is driven by structural momentum, not speculation, making this silver bull market unlike anything seen in recent decades. Now, we present the clips from Michael's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you and enjoy the video.
If I marked over the last couple years, especially since 2024, when we said, okay, gold's coming out of its sideways range, been stuck just above 2,000 for handful of years, got over 2,000, they'd sell it over like a ceiling. And in March of 2024, as it was coming up over 2,000 yet again, we said this time's difference going to take off. Well, it's been 2 years now, not quite 2 years, because that was March of 24. And silver's doubled in a half from that level. And all along the way, if you went into the internet and looked at analysts and listened to, chief gold analysts from this or that brokerage firm, you'd have heard repeatedly, it's got to correct down to here. It never did. It would always give you some kind of correction. Recall April, May, June, July, and I think partly into August, gold was capped at 3,500. They just couldn't get a correction going. I think all they could create is a stall. And then since October, we had the October high just short of 4,400, and they tried to cap it again. This time, the cap only lasted a month and a half. And, they keep looking at it's now gold's got to go back to 3,500, I hear. Or silver, it's got to go to 40. I don't know what these people are smoking, but, I'm very happy to hear it because I love the continual doubt, because that means these people don't have a concept of what's really underlying these markets' bull trend. It's not just another bull trend in gold and silver. This is something far bigger, and they don't grasp it, nor do they grasp the technicals. And that's, if you're long silver, appreciate that. We'll later hear them scream, you got to buy it. But by then we might be 250 silver. Gold is now always been the mama market of the monetary metals. Okay. People forgot that silver is also a monetary metal and has been for thousands of years and is likely to become so again. Okay. The poor man's gold. But gold, if you just simply go back, and I've said this over and over in interviews, that if you go back and look at the last 50 years of gold and put it on a ratio scale chart, like I mentioned about silver, $4 to 50, back and forth. If you take that same log scale, it says you're going to 500, to match the dimension. In the case of gold, though, it's had a high at $850 in 1980 from a low around 100 in 1976. So 3.5-year bull trend, 8-fold gain times the bear low. Okay. Then in 2001, you made lows at $260-something gold, and you went to 1,920. It took you 10 years to do it. 8-fold move. So ratio scale, the same dimension, though much higher each time. Okay, on the log scale chart. Now gold is beyond the 2000 high in 1920. And if you measure from the bear low that preceded where we are now, that was 2015, gold made a bear low at 1,050. 8-fold says mid 8,000s. Okay. Right now we're 4,500. We're only fourfold into the same type of move we had twice before in 50 years under conditions that are nowhere near as dynamic fundamentally or technically as existed then. We're much stronger. We have much more potential. So when I say 8,000 gold, that's not a prediction. That's saying, hey, if we simply do the norm one more time, we'll be 8,000. Well, can you imagine where silver might be given the fact that it's breaking out versus gold or spread relationship? And I'm arguing that if you go back over the last 50 years and look not at the range of silver, but where were its spread readings versus gold? What was its relative value? In 1980, it was 6.5% of the price of gold. In 2011, in that bull run, it was over 3% the price of gold. Right now, we're just above 1.5% of the price of gold. Imagine if the relative performance, which again is technically broken out, matches or exceeds the relative performance level it saw in the last 50 years, like price is already done. What if the spread does the same thing? Silver goes to beyond 3% of gold, or maybe beyond 6.5% of gold, particularly in the next 6 months. That means if gold's 8,000, you do the math. Your jaw will drop. So I think you have to open your mind to that possibility too. So gold getting to 8,000, even if it just goes there, the norm, the question is where's silver going to be?
Michael argues that today's gold and silver rally is unlike anything seen in recent decades. Since gold broke decisively above the $2,000 level in early 2024, repeated predictions of major corrections have failed, producing only brief pauses rather than true pullbacks. Oliver notes that gold's current move is only fourfold from its 2015 low, while previous bull markets delivered eightfold gains, implying a potential path toward 8,000 gold without making a prediction. More importantly, silver's breakout relative to gold suggests far greater upside. With silver currently near historic lows versus gold, a return to prior ratios could imply explosive price acceleration ahead. Let's get back to the interview.
The performance of gold, for example, versus the S&P is no longer a duel, which for the last 10 to 11 years, if you looked at a spread chart of gold divided into the price of the S&P, you'd see this basing pattern with ups and downs within it, which case gold outperformed for a year or two and then pulled back some. And, so basically sideways, where it was basing relative to its performance to S&P. It broke out of that pattern in November, and now it's 1 month later, and we've gained hundreds of dollars, and the spread has continued to explode. But also, when we analyze gold and silver miners, like let's say GDX or XAU, and divide it into the S&P 500 and plot the same chart going back a dozen years, lo and behold, it broke out also in November. Meaning, which place should I be, the U.S. stock market or gold and silver miners? Well, it said gold and silver miners. Well, they've roared since November. They've been roaring before that, but this thing said something just began. This is a big metric. I mean, you don't build a base that's 11 years wide, clearly defined with multiple highs that hit the same sort of level, and you can draw a line, anybody could, and you break through that. That's a breakout. It's fresh. And silver did the same. But the other thing that we thought was more important for silver is that it broke out versus gold, meaning that if you want to allocate assets to monetary metals, fine, that's what these charts tell you to do. But within that complex, you want to preference silver. It's likely to lead. Silver's also broken out of its what we call the idiot range, which it's been in for 50 years. $50 for $4, $50 back down, 50 years in a range, an old normality. We showed in reports a couple months ago a similar situation in copper and lead that had prevailed back in the 70s through 2005 to 2007. It's like multiple decades of range-bound action by both those base metals. And in 2005, copper broke out of that range, and in 2 quarters, it quadrupled in price and then lived in a new reality subsequently. Now it's breaking out again to another reality. Lead did the same thing. In other words, when it finally decided in 2007 on its own merits to break out of a multi-decade old reality, we think silver is highly likely to go, I think personally, my own positions, which I expose in the report at the end in a disclaimer, is likely to see, $200, and it might even see it within the next handful of months. In other words, within a couple quarters of that breakout. So put your seatbelt on and don't expect normality. We examine platinum, palladium, and all the other components of the Bloomberg Commodity Index monthly, technically examine them. And Platinum, I know a lot of people like to link it to gold, but unfortunately or fortunately, whatever, the reality is that if you go back decades and decades and look at platinum and look at gold, they do not correlate well. There have been times when they do, but there's also been times when the Bloomberg Commodity Index correlates to gold. So, you can't say corn is like gold, okay?
Michael Oliver explains that gold's performance versus the S&P 500 has decisively broken out after more than a decade of basing. Since November, gold, and especially gold and silver mining stocks, have surged, signaling a major asset allocation shift away from U.S. equities. Oliver emphasizes that silver's breakout is even more significant, as it has also broken out relative to gold and escaped a 50-year trading range. Drawing parallels to past multi-decade breakouts in metals like copper, Oliver believes silver could rapidly move toward $200 within a few quarters, warning investors not to expect normal market behavior. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support and turn on notifications to stay informed about our latest videos. Thanks for watching.